almost done with cash flow. I think we've covered everything that I wanted us to cover. It's a matter of practicing now. So we're just going to go through a few question papers and then we move on after that to cover the other things. I want us to finish everything that we need to do for term 1 and so that we can also focus on paper 2 as well. And then after that, we do a revision because that's more important. I want us to do question papers one way until the day you have to go and write the exam. But for now, we still need to finish the work. For now, we still need to finish the work that we need to do. So guys, let's look at the question. Question 2. We're dealing with fixed asset cash flow statement and the financial indicators. We haven't done financial indicators with you, but I'm still going to go through the financial indicators with you. I did this question with you guys. 2.1, I think we did it, and 2.2. We're just going to go through it quickly and then we carry on with 2.3. I think that's what is more important that we need to do today. But I want us to go through the information first and then we can carry on. So what is happening here? They're saying the information related to Premier Ltd for the financial year ended 28 February 2025. Okay, so Premier Ltd, this is the company that we're working with, and it has a year end of 28 February 2025. If we look here, guys, we did speak about our accounting period. We said it will start from 1 March 2024 and it will end 28 February 2025. Then for 2.1, they said, refer to information D, and then you have to calculate the missing figures indicated by Roman figure 1 to Roman figure 3 on the fixed asset notes, right? We did work on this one. And 2.2 calculates the following figures for the cash flow statement, taxation paid, and they also want dividends paid. I think we did calculate this one again. We're just going to recap, go through it quickly, and then we move on to 2.3. 2.3, they want us to complete the cash effects from financing activities in the cash flow statement. That is one thing that is more important. I want you guys to take note of. When it comes to exams, it's rare that they will ask you to do the full cash flow statement as we have been doing on those examples that we've been working on. But here, they're just going to ask you operating activities only. They're going to ask you investing activities only. They're going to ask you financing activities only. So they will not be asking you everything. So they can ask you a section of the cash flow statement, okay? So today we're going to do the financing activities. But yeah, it doesn't mean that you don't need to do the other activities, because if you look, tax paid and dividends paid, they're from operating activities. So you still need to know that. So knowing the full cash flow statement is very good for you, because whichever section they ask you on, you will be able to answer. 2.4, calculate the following financial indicators on 28 February 2025. What are financial indicators? Financial indicators, we're talking about those ratios that we use, right, to analyze the financial statements, to analyze the financial position, the profitability of the company. So these are some of the financial indicators that we have: operating expenses on sales, percentage return on average shareholders' equity, and then dividends per share. These are not all of them. We're still going to work on others for liquidity, profitability, and then gearings. Those are the things that we're still going to look at. But here, we're going to calculate these financial indicators. And when you're doing a financial indicator, you have to be able to calculate it, but also you must understand the meaning of the financial indicator. What does it mean? Okay. 2.5, according to the fixed asset note, see information D. The company completed extensions to the building for 7,909,600 during the financial year. I think we did see that when we were doing the additions for land and buildings. Then they're saying name 2 major sources of funding for the extension with figures over 2 million each. You see now, they're asking you, where did we get money to buy to do the extension of the building? And you must know which section of your cash flow statement to look at whenever we're talking about financing or funding. because here they're asking you to name two major sources of funding. When we talk about funding, we can have an equity funding or a debt funding. So which means now that is an equity and liabilities of the balance sheet. But on the cash flow statement, you will find that under financing activities. So that's the activity that we're going to look at, which is the one that we did under 2.3 to answer the question. The second bullet, for each source, state how the cash flow will be affected negatively in future. State one different point for each source. So this is like a theory question that we're going to be looking at, which is very important for us to understand when it comes to the cash flow statement. The information that is provided in front of us. We have extract statement of comprehensive income for the year ended 28 February 2025. And then with extract statement of financial position, they gave us sales, operating expenses, interest expenses, net profit before tax, and then they gave us income tax, and then they gave us net profit after tax. We are aware of this information. We're using it under operating activities. Everything that is sitting on the income statement is used under operating activities. Okay. Then they gave us an extract from the statement of financial position. Current assets, non-current assets, we have current assets here. With total assets, we have equity and liabilities, ordinary shareholders' equity, non-current liabilities, and we have the current liabilities. So some of the information that is sitting here will be used on the cash flow statement. Number C, shares and dividends. The company had 3 million shares in issue on 1 March 2024. That these are the shares that have been issued at the beginning of the year. So which means now this ordinary share capital that is sitting in the balance sheet correspond with these 3 million shares that were in issue. And then 1,050,000 new shares were issued on 30 June 2024, and the price is 6,300,000 rand. So you can be able to calculate the price per share. An interim dividend of 32 cents per share was paid on 31 August 2024. We used this information to calculate the interim dividends or to calculate dividends paid. I think we used part of this information. 50,000 shares were repurchased for 350, more than the average share price on 31 October 2024. This is the share buyback. We know very well that a repurchase of shares, repurchased will be part of what? The financing activities. Final dividends was declared on 28 February 2025. Then we have this information number D that talks about what? The fixed asset note. We had to calculate carrying value, disposal, and we had to calculate the depreciation on equipment. And we had this information. They told us here that extensions to the buildings were completed during the financial year. And these extensions costed us how much? 7,909,600 rands. So this is the extension they were asking us about there on that information, the theory question that we saw there, where we needed to identify the sources of funding for this extension of the buildings. Okay, I will not go through this. It's something that we spoke about in terms of calculating the depreciation. So here, we did calculate the carrying value at the beginning. We got 7,570,000 rands. And then for vehicle disposed, we did calculate the carrying value of the vehicle that was disposed, which was 159,000 rands. Okay. And then number 3, the depreciation for equipment, the total depreciation that we calculated, it was 406,500 rands. I hope you guys still remember how we did these calculations. I want us to remind ourselves. That's why we're looking at this one. I want us to look at them. Okay. Okay, then taxation paid. Taxation paid that we have. we did calculate how much tax was paid, and we got how much? We got the 2,104,000. We got the 2,104,000 rands for dividends paid. We did calculate the dividends that were paid, which is 2,136,000 rands. Okay. And then after that, I think that's where we ended by calculating what? Dividends that were paid. Okay. Now, 2.3. This is what we're going to do again, guys. 2.3. This is what we're going to do. Okay. Complete the cash effect from financing activities in the cash flow statement, right? We need to deal with the cash flow from financing activities. And this is the format that we have been using before. This is the format that we have been using. Okay, we have proceeds from issue of shares, so we need to go and check if we issued shares, and then we calculate those proceeds from issue of shares and check how many shares that we issued. And we got that from the information that we issued a certain number of shares. If you remember here, we do have shares that were issued during the year, which was 1,050,000 shares. 1,050,000 new shares were issued on 30 June 2024 for 6,300,000 rands. Can you see, guys? These are the shares that have been issued. So these are the proceeds from the issue of shares that we have received. So we're going to receive the 6,300,000 rands. That is the cash inflow. That is the cash inflow. Okay. That is the cash inflow. So what we're going to do now, we're going to record it as part of what? As part of our proceeds from issue of shares. Okay. So these are the proceeds from the issue of shares that we have, because we issued shares amounting to 6,300,000 rands. Okay. Cash paid for share buybacks. Cash paid for share buybacks. Cash paid for share buybacks. We need to go and check if we bought back shares, and then we need to calculate the cash that was paid from those shares. And looking at the information that we have here, 50,000 shares were repurchased for R350 more than the average price on 31 October 2024, right? 50,000 shares were repurchased for R350 more than the average share price on 31 October 2024. So now what is going to happen? These are the shares that have been issued, which is 50,000 shares, but were repurchased for R350 more than the average share price. So for now, which means now we need to calculate the average share price first, and then after that we can be able to get the amount that we used to buy these 50,000 shares, because we can't say it's R350. No, it's R350 more than the average share price. So what we need to do now, we need to calculate the average share price. Okay, we need to calculate the average share price so that we can see how much is the average share price. Remember, average share price, for us to calculate it, we're using what? For us to calculate the average share price, we need to get the amount for opening shares plus additional shares issued before we buy back the shares, and then we also use the number of shares opening, or maybe the shares that have been in issue at the beginning, plus the shares that were issued during the year. Okay, let's go and check that information. Okay. At the beginning, we know very well that the company had 3 million shares in issue at the beginning. So, but the amount for those shares was 13,950,000. So, which means for us to calculate the average price, we're going to say 13 million. We're going to say 13,950,000 rands plus we need to find out how much shares were issued during the year. There was 1,050,000 new shares that were issued on 30 June 2024. That is 6,300,000 rands. Okay, that is 6,300,000 rands. Okay, 6,300,000 rands. That is the shares that have been issued during the year. And then they divided by the number of shares now, because these are the rand values. These are the rand values. So we need to divide it by the number of shares that have been in issue at the beginning plus the shares that have been issued during the year. So what is that? 3 million shares were in issue at the beginning. 1,050,000 shares were issued during the year. So we're going to have 3 million shares plus 1,050,000 shares that were issued during the year. Okay, then now, if I add the two amounts on top, how much am I getting?
$20,250,000.
20,250,000. Okay, like this now. Okay, and then the number of shares, it's going to be 4,050,000. Okay, so how much is the average price?
R5.
We're getting 5 rands. Okay, so this is the 5 rands average price. This is the 5 rands average price. So now, if we go back to the transaction, they said 50,000 shares were repurchased for 350, more than the average share price on the 1 October. So it's how much did we buy the shares back? It's how much? Which means shares were repurchased at how much?
8.50. R8.50.
Exactly, at 8 rands, 8.50. So it means the shares were repurchased at 8.50. So for me to calculate the cash paid for share buybacks, that is 50,000 multiplied by 8 rands, 8.50. Okay, 50,000 multiplied by the 8.50. Then how much are we getting?
$425,000.
425,000 inflow or outflow?
Outflow.
Exactly, this is an outflow because we're buying back the shares. Okay, and then now proceeds from long-term loan, repayment of long-term loan. Now we need to go and check if we do have the information, any proceeds from long-term loan, any repayment from the long-term loan. Let's go and check. The long-term loan that we have, we need to go to our non-current liabilities. If we look here, we have non-current liabilities here. We don't know what the non-current liabilities consist of, but most probably this is going to be obviously a loan that is sitting as non-current liabilities. Okay. 2,780,000. It increased to 6,513,000. Is this an inflow or an outflow? It went up from 2,780,000 to 6,513,500 rands. 6,513,500 rands. Okay. 6,513,500 rands minus. It went down. It went down to 2,780,000 rands. 2,780,000 rands. Okay. Since the loan has increased, the non-current liabilities have increased. What do they indicate? Is this an inflow or an outflow?
Inflow.
Definitely, it's going to be an inflow because it means we borrowed more money, 2,780,000. it goes up to 6,513,000 rand. So which means now it means we borrowed more money by how much?
3,733,500.
3,733,500 rands, which is going to be an inflow. Then the repayment of long-term loan, we're going to have it as what? As zero. Going to have it as zero because it means we didn't pay anything. Instead, the loan increased here. So it indicates that there's nothing that we paid. So now when it comes to the total, it's going to be the three amounts when it comes to the total, which is going to give us 9,608,500 rand. So this is our cash flow from financing activities. Okay, so this was just the information that is this was just to answer that question, guys, about the financing activities. And that was provided. 2.4, they're saying here, calculate the following financial indicators on 28 February 2025. Percentage operating expenses on sales, right? Percentage operating expenses on sales. That is 2.4. That is 2.4. This is like, you see, guys, these questions, they are very important because they have marks. We can do the cash flow and be comfortable with the cash flow, but also we need to be comfortable with these small questions because if you look here, 3 marks plus 4, that is 7. You see, then plus another 4, that is 11, plus 4, 15, right? Plus 2, that is 17 marks. You cannot afford to lose these 17 marks in a question. Just because you're comfortable with the cash flow, you can do the cash flow, and then you just forget about the theory question in the other financial indicators. No, we must be able to answer these theory questions. Operating expenses, percentage OPEX on sales. Let's look at it and see if we can be able to calculate it, okay? We need to calculate percentage operating expenses on sales, right? Okay. Operating expenses on sales, that's what we need to calculate, okay? What is the formula for operating expenses on sale? Anyone who knows the formula? Operating expenses on sales. What is the formula for that? Operating expenses on sales. That is operating expenses over sales times. We're going to have multiplied by 100 over 1, right? So this is the formula, right, for us to calculate the percentage operating expenses on sales. Why we're doing this? Why we're doing this financial indicator? The reason we're doing this financial indicator is because we want to understand how much expenses are covered by sales, right? That's why we want, because this formula is going to give us 20%, maybe, for example, it is going to give us 20%, which means now 20% of sales cover the expenses if it's 20%. So that is the meaning of the financial indicator. It tells you how much of expenses are covered by sales, right? So now we need to find out operating expenses, how much. We need to go and check how much is the operating expenses now. Let's go to our information. Operating expenses over sales. Let's go and check. If you look here, operating expenses, that is 4,667,600. 4,667,600. That is my operating expenses. Over sales, how much sales do we have there? That is 260,480,000 rands. That is my sales. Okay. Then multiply by 100 over 1, with which this doesn't change. Okay. multiply by 100 over 1. So let's carry on, guys. Let's carry on with this one. Let's carry on with this one. So what is our ratio here? What is the percentage we're getting if we punch the calculator? Come, guys. What is the answer here?
17.63%.
17.63.
Yeah.
17.63%. Okay, 17.63%. Thank you on that. What does this mean? It means that 17.63% of expenses are covered by sales, or 17.63% of sales cover the expenses, right? Which means since we have the 4 million, how much sales? We have 26 million sales. 17% of this amount goes to the expenses. That is the meaning if you interpret, because this is just a calculation. Sometimes we'll ask you to calculate and interpret. What does this mean? It means 17.63% of sales goes towards the expenditure. That is the meaning of the ratio. Okay, thank you on that. The next one, return on average shareholders' equity. We usually call this ROCE. Which is a return on average shareholders' equity. Okay. This is ROCE. We're still gonna work on this one, guys. Don't worry, but it's important that I do it with you. It's important that I do it with you while we're here. So how do we answer a question like this? How do we answer a question? What is the formula? I think the starting point is that we must understand, we must know what is the formula for us to calculate what? What is the formula for us to calculate? To calculate the ratio. What is the formula for us to calculate the ratio? This is a return. As soon as they say return, you must start with the profit, right? You must know the net profit. If you go to the information here, how much net profit they provided us with, they gave us how much? If you look here, we have the profit of 4,646,000, okay? 4,464,000 rands. 4,464,000 rands. We need to, this is a return, but now on shareholders' equity, that is the net profit all over a return on average. Okay, let me just draft the formula here so that we can be able to understand it. This is the net profit after tax. Net profit after tax over average shareholders' equity. Okay, so this is the formula for us to calculate ROCE. Okay, multiply by 100 over 1. Okay, so this is our formula. Multiply by 100 over 1. Okay, now we need to check again how much. Now we need to do the calculation. How much is our net profit after tax? How much is our net profit after tax? Let's go and check that information. Net profit after tax, that is 4,464,000 rands. 4,464,000 rand. Okay. 4,464,000 rand. That is the net profit after tax. Okay. Over average shareholders' equity. So when they say average shareholders' equity, you need to take the opening balance plus the closing balance, and then you divide them by 2. That is an average. Average shareholders' equity. If you look here, the shareholders' equity, we're talking about total here, not the share capital or retained income, but the total. And if you look the total amounts that we have here, we have 14 millionaires and 13,000, we have 22,556,000, right? So these are the two amounts that we have. The average, for us to calculate the average, 14 millionaires and 13,000 plus 22,556. These are the two amounts that we need to add. 22,556,000 plus 14 millionaires and 13. So these are the two amounts that we need to have. 22,556,000 rand plus the second one is 14,913,000 rands. 14,913,000 rands. Okay. Then we're saying divided by 2, because these two amounts we must divide them by 2. Okay. Then what do we do after that? Okay, I'll say is equal to. Okay, now let's do this calculation here, guys. The one at the denominator. How much do we get for the denominator here? Because I'm going to bring down the 4 million, but in terms of the denominator, what is this average? If we punch the calculator. How much are we getting, the average?
17,734,500.
17 million, please come again.
17,734,500.
500, okay. You're getting the same thing on your side, Smanga?
Yeah, I'm getting the same thing.
Okay. We're taking the two amounts, then we divide them by 2. I'm getting 18,000. I don't know. But the amount that I'm getting is 18,734,500, not 17.
I'll double check my calculation.
Yes, please, guys. Let's double check again. I'm getting 18,000 here, not really 17.
It's 18,734,500.
Okay, thank you on that. Okay, then now the total. All right, the total percentage now, how many percent we're getting? What is the percentage we're getting?
23.83.
23.83%. Is this what we're getting? Okay. Then it means now, okay. So which means now, what is the meaning of the ratio? We need to understand this 23.83. What does it mean? This ratio, it means that the equity that we invested, right? The equity that we invested from the company, which means buying the shares together with the retained income, is equivalent, it gives us a return of 23%, right? Because remember, this is an investment. The shares, right? The shares that have been issued by the company, that is the investment of shareholders. So which means now, if you invest money in the bank, like the fixed deposit, you're expecting a return, which is an interest income, right? When you take your money, you go and invest as a fixed deposit into the bank, you're expecting a return on your investment, which is an interest income. So now, if I analyze it based on that fixed deposit, which means your fixed deposit gives you a return of 23%, which is an interest income. But now, in this scenario, we're talking about the investment by the shareholders. They bought shares from this company, which means they invested their money in this company. And from that investment, it brings them back a return of 23%. So that is the interpretation that you need when it comes to that is the interpretation we need when it comes to ROSHE. It's a return on shareholders' equity. How much the equity that have been invested by the shareholders, how much return do they get from that investment? That is the meaning of the ratio. Okay, and then we go back again. Dividends per share. Dividends per share. What is the dividends per share? It's very easy, that one. Dividends per share. Dividends per share, the formula. What does the formula say? It is calculated in cents, this one. We're taking the total dividends. Total dividends divided by number of shares issued, right? Number of shares issued. So this is the formula. But we need to be careful now. We need to be careful that from the information that we have here, we have two things that we need to focus on. Number one, we have interim dividends here. And the interim dividends, we know very well how much per share. An interim dividend of 32 cents per share was paid. So interim dividends, we understand that it is 32 cents per share. That is interim dividends, 32 cents per share. So I can say here interim is equal to 32 cents per share, this one. We already know, right? We already know 32 cents per share. Then now the final dividends, that one we need to calculate. How much was the final dividends that were declared divided by the number of shares that are in issue? The final dividends, how much is the final dividends here in terms of the rand value? We still remember, how do we see the final dividends?
It's 1.4 million.
It's 1.4 million, very good, which is the shareholders for dividends at the end of the year. The shareholders for dividends at the end of the year will always be equivalent to the dividends that have been declared at the end. That is the final dividends. That is the final dividends divided by the number of shares, divided by the number of shares issued at the end of the year. How many shares have been issued at the end of the year from the information that we have? How many shares have been issued at the end of the year?
1 million shares. 4 million shares.
4 million shares. How do we get that? 3 million plus 1,050,000 rands minus 50,000 rands. We end up having 4 million shares. So I'm going to say 4 million. We end up having 4 million shares. Okay, and then if we say 1.4 million divided by 4 million, how much we're getting as a dividends per share? How much we getting?
$0.35.
0.35, which gives us 35 cents. 35 cents. 0.35 is 35 cents per share, right? 35 cents per share. So now the total dividends per share ends up being how much? Dividends per share. Remember, that is the interim plus final. So it's going to be 32 cents plus 35 cents. Okay. And then how many cents are we getting in total? 35 plus 32. And how much we're getting? Then we end up getting the 57 cents, right? Per share. That is the dividends per share. That is the dividends per share. I hope you guys can see this. I hope you can see this. It was just a matter of doing these calculations. Other than that, there's nothing much that we should be worried about. Okay. Now let's go to 2.5. Now let's go to 2.5 and see what do we have there. 2.5, what they're saying. They're saying, according to the fixed asset note, see information D, the company completed extensions to the building of 7,909,600 during the financial year. 7,909,600. Days it's there. 7,909,600. These were the additions. These were the additions. Then they're saying, name two major sources of funding for the extensions with figures over 2 million each. We need to get the sources of funding. Where did we get money to do these extensions on the buildings? Where did we get money? Where did we get money for this?
Did you get it from the loan?
The loan and what? Exactly, because we did borrow money. Obviously, we have to go to our financing activities. The loan, where is the loan here? How much we got from the loan? We got 3 million, eh?
Yeah.
We got the money from issuing shares.
Exactly, again, very good, from issuing shares. So these are the two sources of funding, because they even indicated there that it must be above 2 million, over 2 million each. So the first source is what? Loan. Okay, I can say here, loan of how much? I need to show how much was that loan. How much was that loan? 3,733,500, because they said we must 3,733,500. And then the second one is shares issued. Yes, shares issued. And then how much did we get from those shares issued? That is 6,300,000 rands. Okay, 6,300,000 rands. Okay. Then now the question further stated, they said here, name two major sources of funding for the extension with figures. We've done that, 4 marks for free. You can see like this is just free marks, guys. It's just free marks. For me, it won't make sense for you to get 0 on this 4 marks because it's free. It's something that you calculated, you got there under 2.3. You're taking it as it is to this first bullet. The second one, for each source, state how the cash flow will be affected negatively in the future, right? State one different point for each source. How is this going to affect negatively the cash flow in the future? So if we borrow money, how is it going to affect us in future? How is it going to affect the cash flow in future?
You might have less cash because you have to pay off the loan.
Exactly. Loan has to be repaid, right? Loan has to be repaid in future. Loan has to be repaid in future, resulting to the cash outflow, right? Resulting to cash outflow. That is the negative effect on our cash flow, this thing, because we need to pay this loan together with interest, not just the loan amount only. They also going to charge us interest here. There must be interest paid. Obviously, you know, on the cash flow statement, we also have interest paid. So loan together with interest, together with interest. Loan together with interest has to be repaid in future, resulting in cash flow or resulting in the outflow of cash. Resulting in the outflow of cash. You can say it like this, okay? Shares issued, what's going to happen there?
You're going to have to pay out more dividends.
Very good. We will have to pay dividends. Dividends paid, you know that on the cash flow statement, there will always be dividends paid. So it's going to negatively affect the cash flow. Dividends have to be paid in future, right? Dividends have to be paid in future, resulting in the outflow of cash. This is the negative effect of this. It's good for now because it brings in the cash. We got money from the loan, we got money from the shares issued for now, but in future, it can have a negative effect. But although it's going to have a negative effect, but that negative effect, it has to be covered by the money that you're going to receive. Because now it's not like these buildings that we have extended here. They must generate cash for us as well, right? It's not like we're just going to pay only. We're going to pay, yes, we're going to pay the loan in future. We're going to pay interest in future. We're going to pay dividends in future. That is true. But it's not like the buildings that we extended or purchased. We have to use those buildings to generate money. So the money that we're going to pay in future will come from those buildings. It has to be the cash that will be generated from those buildings, because that is an asset that we need to use to generate money in our business. That is an asset that we need to use to generate money in our business. So I'm happy, guys, that you are able to look at this question. We are right now going forward. When we do a question, we do everything, right? We do everything. I know we're busy with cash flow, but these questions, they are related to cash flow. So we will be doing everything going forward. Okay, this is the end of the question. There's nothing else that we need to do here. We will do another question when we meet on Wednesday. Any questions on your side, guys? You're happy so far? Nelo, how are you feeling?
Fine.
Okay, Smanga, on your side?
I'm good.
Okay, thank you, guys. I wish you a lovely evening. I will